Hello, traders. This is Sam Morton. Welcome back to another daily recap on the Ticks and Trades channel. Today is Tuesday, November 12, 2024. It's a few minutes after 8 a.m. Eastern. I'm going to go out on a limb today, which, by the way, is an expression or idiom that means to do something that is risky or extreme, even though it might fail or be criticized, and say that I'm more inclined to think that price could pull back today rather than rebound and keep climbing. On most days in the market, there are three things that price can do: go up, go down, or go sideways. And yes, while everything is still bullish on all accounts right now, I'm just sensing some things starting to develop that give me the feeling that some bears might show up soon and push price down. You're probably already thinking to yourself, well, Sam, it's not a good idea to trade on feelings, and you'd be right. It's better to have a systematic approach to trading instead of just trading something because you feel like it's a good play. You need concrete reasons to enter trades. And this is why I say that I'm going out on a limb. What I want to see is price start a pullback today or sometime this week. If I can get on the short side, I'll probably be happy to hold it for a little longer than usual. Again, this goes contrary to everything else I usually do, but if I'm right, it would be cool to pull a chunk of S&P points while riding the wave down. I could be completely wrong, of course, but I don't mind postulating this morning. We'll find out soon enough, either today or the next few days, if I'm right. To cover our bases, let's talk about other possibilities. They could lose momentum and basically go sideways for a while. That would probably be accompanied by low volume. In that case, if price hits any of these levels, they might be good for small reactions for a trade. If price breaks and closes above 600 for a while, that probably means the bulls are not finished and price will go higher. After the closing bell, we'll come back to this chart and talk about whether I'm right about a pullback today or not. And just to clarify, what I'm seeing is really more of a mid to long-term thing. So if price does pull back, maybe today isn't the day it starts. We'll find out soon enough. Catch you on the other side. Okay, we're back. It's almost 9 o'clock, 8:50 p.m. I'm going to go ahead and say that going out on a limb and anticipating a drop today paid off. I was on the short side most of this move down. I also said as much in the email that I sent out this morning. If they didn't drop, I was prepared to eat my words. I'm just saying that now. But as you'll see, I put my money where my mouth is and got on the short side early, just sat back and enjoyed the show as I rode them down. So first, playing by the rules for each level. Assuming you didn't pick up on any of these subtle signals from yesterday and last night that being short was the better bet, and you just traded each of these levels using the same process and rules as always, here's what would have happened. I'll run through and talk about each of these levels as the SPY came into it, but I'll try not to get too much into the details in the interest of time. If you've been following along and watching these recap videos, you should have a decent handle on the jargon I use to describe each trade and certain market behaviors. So playing by the rules, there were 4 trades, of which 3 were profitable. One was a wash, and it happened to be the first one at 598.74. As adjusted, 598.79. Price was above this level at 9:45 or 15 minutes after the opening bell. This would have triggered a trade in the E-minis when they came down into this level, but you got a near miss of the profit objective. I'm not going to draw the lines, but the profit objective is 40 cents in the SPY, 4 points in the E-minis. They came up within a certain amount, within 10 cents, and immediately fell back down to your entry point. That's a clue. That kind of behavior usually means you missed the base hit, and being long is probably not a good idea. Of course, you should have known going into the day that the plan was to be on the short side as much as you could. So one trade closed out at a wash. The next level was not triggered because of a near miss. 597.68 would have turned into 597.73. Classic near miss. Not once, but twice. This came in within 2 pennies of triggering your trade, pulled off again. So you definitely do not want to get on the long side after this kind of behavior. That would keep you out of trouble. They're essentially telling you they're going lower. Once again, you really wanted to be on the short side this morning. So it was a little too early to take the recycled trade here. Not enough time had passed from when they got out of this level. So it's 5 cents toward price on the other side, so 597.63. And in any case, it was a near miss. That was your near miss there. So that's pretty much done. No profit in the bag so far. Finally, they came down into 596.62, so 67. And this was your first base hit. Out of the money a little bit, no big deal. They bounced, gave you your base hit. So you got a long trade there, and they came back just in time to give you a base hit on the recycle if you chose to take that at the same level. At this point, if it were me shorting this level per the rules, I would have probably held out for more than a base hit, possibly ridden this thing down to the next level. we're sticking to the rules, so our tracking log is accurate. So we're just going to say 4.4 ES point minimum base hit. So that was the second trade, official trade. So price is falling down into 595.63, official, the operating level. And that is a viable option to go long here. Now they fell through it, and as you'll see on my recording, I was kind of anticipating that, but don't want to talk about that right now. It may not have felt good to be out of the money in the red here, but just given this time, there was no rules broken. So the trade paid off if you just gave it time to develop. So this is your third base hit as they started climbing back up. And we can talk about these other levels here, whatever the operating level was, initial level. Do you want to take a recycle trade here? No, because it gave you this trade here. I'm talking about a short trade here. Same thing up here. That was the tail right here. The last time they were here, they had a near miss. So I do not want to take a short trade here. Just incidentally, there had been enough time that had passed. So it's up to you whether you want to try this again. I don't usually do it, but I did the math, or I just checked it out, and this would have given you a base hit, even being out of the money a little bit. And then they came back to another level here. And two reasons why you wouldn't have taken this trade. One, the time of day. It's within like 5 minutes of the closing bell. Plus, you already had the long trade back here. So we're not counting either of these, but that's why there is a process. Sticking to the process would have given you 12 points, at least, if you were diligent. So I took one trade that included a trailer, and it was a lot easier than what we just went over on these playing by the rules trades. I'm going to start playing this in a second. I just want to point out the time. It's 9:46, almost 9:47. So normally at this point, I'm ready to take a long position here. I did not want to be on the long side. I wanted to be on the short side. So what happened is they bounced at this level, and I went short with 4 right about there as they were coming back up. And I had 3 contracts that I bought back for a pretty good base hit, and trailed the remaining contract for quite a bit more with a 12-point trailer, thinking it would be enough to provide enough cushion to essentially go through these other levels. I had my sights way down lower. In fact, that zone we had at the very bottom of the chart this morning, that's where I wanted to jump out, and that'll make sense when you see this. But I'm just going to let you just watch this and enjoy the show. Once they got below this lower level there, the 595.58, I was really hoping they'd go all the way down to this zone. So you see the target down here that I want to jump out before they got to the zone. And I adjusted this back up to above this little area, thinking I'd give them some room to bounce off this level and come back down. But they stopped me out at this $1,500 though, $1,500 on that last contract. I'll let this go for a little while longer. And there's nothing much to see. You can see I'm pretty much done for the day. About $2,500, $2,400 or so. Not too bad for really not working very hard. Just watch this all day long and just enjoy the show. So anyway, that's pretty much it for my trades, or my one trade. Wasn't really prepared to go into a lot of forecast analysis here, but we can make a few observations on the daily chart here. So they closed today well below the close of yesterday, and they're still in this area where they could come down quite a bit, and it would not be out of the ordinary. There are several places for price to get caught on the way down if they continue to do this, but they're just kind of in this middle of an area. And honestly, at this point, I'm not going to dig into a lot of other smaller time frames or other ETFs or anything like I usually do. I will do that before the morning, though. Just want to point out that this may or may not be the beginning of a bigger pullback. Where are they at now? 596.90. Pretty much right where they closed. Maybe let's go ahead and look at, say, an hourly chart and turn on the after or the 24 hours. Not the best thing to look at. How about 10 minutes? And it's going sideways. Not much to see here. So I'm going to reserve a more detailed analysis for maybe tomorrow or the next few days as things pick up, if they pick up. And by the end of the week, we'll probably have a little bit more movement. That's just a prediction, but I'm not going to say anything about what's going to happen tomorrow until tomorrow morning when I do the work. Here are the tracking logs. The first one, playing by the rules. There's quite a bit of notes here to read about how the 12 points came about. I talked through all that, but you can read it, pause the video if you want, take a look at all the profit potentials, averages, and see where all that landed. And then my trade was essentially, since it was a 4-contract trade, there we go, 24.75. It was a 12.38. That was kind of the net points on that position because most of that profit was just with one contract as they fell. So that's a wrap for today. I think today was a pretty good example of demonstrating how sticking to a process can keep you out of trouble and hand over consistent base hits of at least 4 points at each level. And if you were more adventurous and understood the bigger picture and just had a sense for understanding the feel of the market, then you could have just had an easier time like I did and just traded one trade and just watched points rack up as they fell all day long. Doesn't always happen that way, but I'm happy with it. As always, if you found value in today's recap, make sure to like this video and subscribe to the channel. I appreciate the support. And if you want these levels for yourself to try your hand at trading them alongside me every day, then just head over to Ticks&Trades.com to learn more. I'm happy to give you access to these same levels. So thanks for watching. Stay disciplined. I'll catch you in tomorrow's recap. Have a great rest of your day.